What is up, everybody? Welcome to the EmPower DFW Virtual Summit. This is our second virtual summit, and I'm so honored to get to be a part of this organization, to get to MC this event, and hopefully something said today is going to spur change in your life, is going to encourage you to do something a little bit different. Maybe it's just going to be a warm hug that's going to help you know that you're moving in the right direction, you're making good decisions, and the good things are about to start coming. But as we jump into this, you are going to hear from four different professionals that are all a part of the board of EmPower DFW. We all do different businesses that kind of, in a cool way, kind of when you bring them all together, it kind of makes a super team. And so we're going to talk about taxes. We're going to talk about business strategy. We're going to talk about branding. We're going to talk about social media. There's going to be something today for each of you. So if you want to participate, the chat is open. Put questions in the chat. Tell stories in the chat. Be engaged. Be a part of this. Share this to your page, because this is designed to help young, struggling, and future entrepreneurs. And so with that being said, I want to bring in one of my favorite people on the planet, Alfred Record. Alfred, what's up, bro?
What's going on, Kyle?
So, guys, those of you that don't know him, this is the founder of EmPower DFW. And so if it wasn't for you, this wouldn't be possible. And so I don't want to steal any of your thunder, man, but dude, just thank you for making this actually happen.
Oh man, it's my pleasure to serve. It's my pleasure to be here, and I'm excited, guys, that everyone that's joined in with us today. I hope you got your lunch ready, because this is a lunch and learn style. Now, we're not providing lunch today, but we're providing you with some great tips, some great strategy, and just some great information from some experts in our different fields. As Kyle said, I got my lunch here, so I'll be eating this here in a little while after I finish sharing with you. But EmPower DFW is all about what it says: empowering Dallas-Fort Worth entrepreneurs, new entrepreneurs, or aspiring entrepreneurs, those who want to go from being a small business or a side hustle to an actual full-time business. That's what I did. I did it myself about 6 years ago. I started out as a teacher, teaching seventh grade math. I started doing taxes on the side. And the next thing that I knew, after about 3 or 4 years, I was able to make enough money on the side to replace my full-time business. And so that is what birthed the passion inside of me to want to help others to do it, because there's nothing like being your own boss. It's great. It's not for everybody. Okay. It is a lonely road sometimes. It's a roller coaster world, but it is a great life if you're able to manage, starting your business and keeping it afloat along with your family and other goals in life. So I wouldn't replace it for the world. And so that's how DFW, EmPower DFW, was started. That's how it was birthed. And I was able to bring in others like Kyle, like Sheena Morgan, like William White, all of who you'll be hearing from today, to try to help take your business to the next level, to end it this year strong, and to begin it next year in 2022 in the best way, with tools that you need. So if you haven't already, tag a friend, let them know it's time to get started. Get a pen, get some paper, get your notepad, because you need to take some notes, because you can't we don't want this just to be another seminar where you're just sitting back and, just listening and like, oh yeah, that's what cute things I need to maybe pay attention to or maybe do. No, your business is going to go to the next level by you actually taking the action steps that we're going to give to you today in order to strategize your business and to help save money on taxes and to take your business to the next level through social media and branding. So get your notepad. Let's go ahead and dig in. Let's start taking some notes and let's get into it. So my name, Alfred Record with Life Tax Financial Services. This is my actual business. EmPower DFW is my nonprofit. Life Tax is my actual business where I make money. Okay. And then I actually help business owners to save money in their taxes. And so we're going to be talking today about tax deductions and S Corp implications. That's one of the big buzzwords out there. S Corp. oh, I started my business, I need to escort. No, we're going to talk about what that all means today in this short time that we have together. So let's get started. All right, so a little bit about me. I'm a Dallas native from Dallas, Pleasant Grove area, actually. Actually went to Morehouse College and studied business with a concentration, in marketing. Actually, not an accounting major, funny enough. I kind of stumbled into the accounting and finance world once I moved back to Dallas after working in Atlanta for about 6 years. Came back to Dallas and worked about 8 years for a logistics and transportation company. And then I left there and started teaching math to seventh grade students. That's also when I started doing taxes as a side hustle. I was able to get my enrolled agent designation in 2020, which basically gives me the authority to represent my clients before the IRS. Similar to a CPA, but enrolled agents just focus on taxes only, versus CPAs can also do other things in the financial world. Grown Life Tax over the last 7 years to over 500 clients, and about 30 to 40% of those clients are business owners. So business owners are what we specialize in, from trucking companies to realtors, real estate investors to florists, you name it, all kinds of small businesses. We're here to help. All right, so let's dig into some typical sole proprietor tax deductions. First of all, let's talk about what is a sole proprietor. Okay, sole proprietor is where you just started your own business. You came up with a great product or a great service, and you want to share it with the world and make some money. All right, you have to have what's called a profit motive in order for it to actually be considered a business and not a hobby. And so, as a sole proprietor, you and your business, in the eyes of the IRS, are seen as one and the same. So you need to make sure that you keep that in mind, that as a sole proprietor, it is one of the easiest ways to get started in business, but it is also can also be taxed the highest in a sense. The IRS, if you die, then your business dies with you in a sense as a sole proprietor. Now, some of you may say, well, hey, I went and got my LLC. I registered for the state. I went to LegalZoom or I went to somewhere else and paid my $500-$600, and I got my LLC. So I'm an LLC and not a sole proprietor. Okay. But in the eyes of the IRS, you are still seen as a sole proprietor, even if you have your LLC. As long as you are a single member LLC, you are still taxed as a sole proprietor by the IRS. Okay. So just keep that in mind as we go through this presentation and these slides, so you know where you stand. If you have two members in your LLC, then you are considered by the IRS a partnership and have to file a separate return. As a sole proprietor, you have to file what's called a Schedule C, and the Schedule C is attached to your personal tax return. Okay. Now, some of the typical expenses: gifts to clients. Okay, that's really big for our realtors out there, those gifts to clients. We know that you oftentimes give your clients gifts. And as you're giving them those gifts, you might give them a garage door opener, whatever the case may be. You might give them a bottle of champagne to celebrate. Only the first $25 of that gift is actually tax deductible. Okay, so you might have 15 clients over the course of a year, realtors, that you've bought and sold homes for, but only that first $25 of that gift is tax deductible. If you go over that, then you just gotta eat that on your own. But for each one of those clients, the first $25 is deductible. Meeting expenses with vendors, coffee or lunch. Hey, that's big right now. As of until December 31st of this year, your meetings with your vendors, your meetings with your clients and potential clients are actually 100% tax deductible if you go out to a restaurant and eat. Also, if you set up a lunch for your staff there and you order it in from a restaurant, that is also 100% deduction until the end of this year. So that is a great expense to take as well as a business owner. Advertising expenses, business cards, your website costs, all of these things, as long as you have them separated and they're for your business, are all write-offs for your business. Your insurance costs, you may have errors and omissions insurance or other type of business liability insurance. Make sure that you're capturing those. All of your supplies for your office, your phone expenses, furniture. Okay, all of these are expenses. Car and truck expenses. Now, here's the thing. There's actual expenses, and then there's a standard mileage deduction at 56 cents. You only get to choose one of the two when we're talking about your car or your truck. The actual expenses meaning, you're trying to capture your gas that when you're actually driving around, and the gas that you're spending, oil changes, tires on the car. Okay, all of these things as it relates to actual expenses in your car, your toll tag, what you pay in tolls. All of these things are considered actual expenses, and so you have to take an account for all of those and add them up and keep those receipts, or you keep a mileage log and take the mileage deduction at 56 cents per mile. Your commute back and forth to your office is not considered a business deduction for mileage, because that's just your commuting. But what is considered is anytime you're driving around, going to see clients, you're going to see vendors, you're going to trainings and etc. All of those miles, you're going out of town to meet a client for, in another state or another city. Track all of those miles, and those are considered allowable mileage deductions at 56 cents a mile. Office and home expense. This is another big one that a lot of people miss oftentimes. The office and home expense is basically you have an office inside of your home that's a closed door office, right? And you're not doing personal things inside of that office, but it's just for business. If you're operating your business inside of your home, you now get to take your internet as a deduction, your mortgage or your rent as a deduction, your office furniture that you have, you went in, you furnished your office inside of your home. Those things are a deduction. And even your telephone line and or fax that's inside of your home. All of these are now deductions, but it's only based upon a percentage of the square footage of your total home versus the square footage of the actual office space in your home. So you can't go right off your whole mortgage or your whole rent, only the amount that is in that proportion or that percentage of your office inside of your home, okay? And get with a tax professional to help you to understand how you actually use that special form to get your office and home deduction. But that is one that is often missed. So you need to be able to now write off your internet, your phone, your rent, your mortgage insurance, things of that nature, even your property taxes. All right, so more sole proprietor implications. Now, as a sole proprietor, you are subject to what's called the self-employment tax. The self-employment tax is one that basically is where you're paying your portion into the Social Security system, okay? And so you have to make sure that you're paying into that, and the way that you're paying into that is through the self-employment tax. This is an additional 15% roughly on top of your regular income tax that you pay on your tax return for having a business and being considered a sole proprietor. And then personal liability is basically just says that, hey, you are personally held liable for anything that happens with your business. Someone can come back towards you and your business and basically try to sue you. Now, I'm not an attorney, I'm not a lawyer, but I do know from a tax standpoint that you and your business are one and the same. And so you would have to pay self-employment tax as a sole proprietor. The IRS also allows you to show 2 years of losses on your business, but they are looking for you to be profitable at least 3 out of those 5 years. It's a 3 out of 5 for them not to disqualify your expenses and see you as a hobby instead of a business. So I want to make sure that we understand, if you're going into business, you're going into business to make money. If you have a hobby, you may not be trying to make money with your hobby. You may just be out, just collecting cards or, drag racing or whatever the case may be because you like it and it's just for the fun of it. But the expenses that you incur with that hobby cannot be used to reduce your taxable income. If you have a business, though, and you're actually trying to make money, then you can. However, the IRS needs to make sure that you have what's called a profit motive, so meaning that you are actually trying to make money, and some years you may not, so you get to claim those losses to reduce your taxable income. But you can't do that year after year after year on the same business, okay? So keep that in mind as you're operating your business, and you may have a year of losses, as many people did during COVID in the pandemic. A lot of people lost money, and so the IRS knows that, and they expect for losses to come through on a lot of the returns. And then another implication is, like I said earlier, your business will die with you unless you set it up a certain way. But generally speaking, for sole proprietorships, there's nowhere else to file it on the return unless you have a succession plan for that particular business. All right, so let's talk about the S corporation. All right, so that's what I get a lot of times. Everybody's saying, well, when should I S corp, or I need to S corp, or S corp is the way to go. All right, well, there are a lot of benefits for S corp, but you also need to understand fully what the S corp is and what it means. Okay, so first of all, let's talk about when are you ready to S corp, because you don't just start a business and immediately you S corp. No, it doesn't work that way. You have to be able to pay yourself a reasonable salary. That is one of the first things that is on the S corporation tax return. The S corporation has a separate tax return called an 1120S. And on that tax return, one of the first questions or line items of the first items that are on that tax return on the very first page is, did the owner pay themselves a salary? What is the salary that that owner paid themselves? And if you are not in a position to be able to pay yourself a salary, then you're not ready to S corp, because that is one of the triggers for the IRS, or red flags. If you did not pay yourself a reasonable salary, then you really are not qualified to be an S corp or file an S corp return. Now, let's be clear: writing yourself a check is not payroll. Payroll is when you are actually W-2ing yourself as an employee of your own company. And that is done through some sort of payroll company like Gusto, like ADP, like QuickBooks Payroll. You actually have to hire another company to process that payroll for you. And then you are paying into your portion into Social Security, and you're paying into your state's unemployment. That is when you actually are paying yourself a salary and you are on payroll, not just by writing your name on your check from your company. Okay, so there is a difference. Also, if your business is profiting at least $50,000, that's when you may be ready to S corp. But if you're not profiting at least or very close to $50,000 a year after your expenses, then you're not ready to S corp, because there are extra expenses involved called payroll taxes. And when you do the math, the payroll taxes, outweigh the benefits of the tax savings on the other side. And so it doesn't make sense for you to start to do an S corp unless you're actually profiting in your business at least close to $50,000 a year annually. Okay, so if you're not there yet, you're still at $25,000, $40,000 in profit, then just stay a sole proprietor and continue to use your tax deductions, but don't jump into the S corp world because you're not quite ready yet. Also, you need to be ready to file additional tax returns and can handle the added expense of financial statements and payroll processing. So once you're an S corp, you need to be having your financial statements done on a quarterly basis or annual at the least. The financial statements are your income statement, your balance sheet. These are all accounting things that you may not be very versed in, but you need to be willing and prepared to hire a company to do it, or even do it in QuickBooks if you're doing it yourself. But make sure that everything is being reconciled back to the bank accounts that you use for your business. And you have to file an additional tax return as well, called the 1120S, no longer the Schedule C. Now, what the S corp does is that it gives you what's called the corporate veil. Okay, that corporate veil separates you fully from you and your business from the tax standpoint and the legal standpoint. So you can be an LLC and have the separation from the legal side, but from the tax side, the IRS still sees you and your business as one and the same. Once you S corp, or if you were even a C corp, then you've had the full corporate veil. Your business files a separate tax return from you personally, and with the S corp, it is what's called a pass-through entity. So now your business, all of your business tax implication passes through to your personal return as the owner or whoever are the owners of that S corporation. It passes through, but it is still a separate tax return between the business and you personally. S corps are less likely to be audited. And that's a huge thing. As long as you're paying yourself a reasonable salary, the statistics have shown in all the IRS conferences that I've gone to and the research that those S corps are actually the least likely to be audited by the IRS. Which ones are more likely to be audited? You guessed it. the Schedule C returns, where you're just a sole proprietor and you're just out there, doing business and not really separating everything out. You're kind of commingling funds. Those are the ones to be more likely to be audited. The S corp eliminates the self-employment tax, basically because you're not filing a Schedule C, but you are paying into the Social Security system through putting yourself on payroll as an owner. There are enhanced corporate deductions, and the business can live on beyond your life if it is planned correctly and appropriately. Some of the corporate allowable deductions, which come into play a lot easier during or if you're an S corp, are of course utility bills, phone bills. You can set up certain retirement plans, dependent care plans. You can have a whole company car as an S corp, college funds, life insurance, training expenses, depreciation of all assets, health savings plans, and health reimbursement plans as well. All of these come into play a lot more often and are set up for S corporations. So these are all corporate allowable deductions and more, including fringe benefits and things of that nature. There's definitely more deductions allowed when you are an S corp. All right, so now I'm running out of time, but I'm going to quickly dive into the numbers of what this looks like with a sole proprietorship versus a S corporation and how it's taxed. All right, so let's say that your business at the end of the year, right, netted after expenses $140,000. That was a pretty good year, right? I have clients that are doing that well, and some not as much, but that was a pretty good year to net $140,000. If you are a sole proprietor and you did not S corp and did not C corp, then on your Schedule C after your expenses, it's going to show a bottom line of $140,000 net profit. The self-employment taxes alone on $140,000 worth of profit is a little over $21,000. Okay, just over $21,000 if you netted $140,000. Now, the income tax on that, which is a separate tax, is $27,621. So that's a total of almost $50,000, not including any state taxes, that you would have to pay. Now, let me go back up and say, this does not include any of the deductions as far as standard or itemized deductions, because the government, IRS, gives you a standard deduction of just over $12,000 if you're single, $24,000 if you're married, and those things. This does not include those deductions, but I just wanted you to see kind of the numbers of as where the taxes stand without those deductions to see what you could be potentially paying just by being a sole proprietor versus an S corp. All right. So out of your 140 net, between your general income taxes and your your self-employment taxes, you'd be almost at $50,000 in taxes you'd have to pay. If you were to change your company to an S corp that year, let's say you did everything the same, but you were an S corp instead, and you were single with no kids, you would have $140,000 of net income, right? But here's the difference. The owner paid themselves a reasonable salary of $40,000 of that $140,000. So what happens is on that 1120S tax return, that separate one for the business, it's going to show that the owner paid themselves a salary of $40,000. That owner is going to get on their personal tax return a W-2 showing that they received in wages $40,000, right? And they'll have to pay their taxes on that. But then the pass-through income of $96,000. Well, why is it 100? It's not 100 because there's payroll taxes that were paid from the company of $4,000 roughly. And so it goes from 100,000 to 96,000. And that I talked to you about that earlier, that it is a pass-through entity. So it's going to pass through from your business return to your personal return that left over $96,000 of income. Okay, that's going to pass through to you, and you have to pay taxes on that. But the self-employment taxes you have to pay is zero because you are now an S corp. So that eliminated that $21,000 worth of self-employment tax. You have your payroll tax that your company has to pay, but that is a tax deduction. So the income tax is $26,661 plus the payroll taxes comes out to a total of $30,661. That's a difference of $18,000 in taxes. So who wouldn't want to take those savings, right? That is a big difference. Basically, what's happening is that you're no longer paying the Social Security and self-employment taxes and Medicare taxes. Instead of paying it on the whole 140,000 of net income, you're only paying it on your reasonable salary of the 40,000. Okay. Now, and again, that does not factor in any standard or itemized or qualified business income deductions. And these are all additional deductions that you will get. I know it's a lot of information, but I'm gonna move forward quickly because I'm running out of time. Now, there was that other $60,000 of that net income, right? That amount will actually can be taken as owner distributions or draws throughout the rest of the year. Okay. So basically, what that is there's that money that's left over. And I'm sorry, that says 60,000. It should say 100,000. That other $100,000 after you paid yourself the $40,000 in your salary. Well, you still need the $100,000. I mean, you don't want to just let that money go. So you take that money as owner distributions, and that reduces your owner's basis, which we can get more into at a consult later. But just know that that money is kind of in a sense seen as not taxable income in a sense, but basically you get to take that money in, and it is like you paying yourself back for what you have put into the company before in starting the company up or keeping the company afloat. Okay, so that's what happens with that additional income. So you still get to have that income, and you still have that 140 net, but it's just broken up now between salary and owner distributions. So let's start the year off well as we get ready to wrap up on the tax side. What can you do? I always advise my clients to set aside 1 hour a month for accounting. It's not bad. Okay. If everything else you do and getting caught up in, processing things and running out with clients and going to see vendors and photo shoots and social media and everything else, take 1 hour a month and do your accounting. Okay. Download an accounting app. QuickBooks Self-Employed is like $10, $11 a month. Okay. It's nothing. You spend more than that on two cups of coffee at Starbucks. So get you an accounting system. Expensify, Strive, MileIQ. MileIQ is going to track your miles. When you're going out and running around with clients or going to see vendors or going out for shoots or going to meet someone at a house, if you're a realtor, to show them a house, track your business miles and spend an hour a month in your accounting to make sure that your books are up to date and clean, and that you're taking pictures of your receipts or keeping your receipts. Set aside 20% for taxes. Okay. Try to pay yourself your quarterly estimated taxes and keep some good records. Keeping good records is keeping those receipts, keeping your financial statements, keeping your Excel sheets, or pay someone to do it for you. Maybe get your spouse to do it for you if they're better at that. But make sure that you're setting time aside every month to keep up with your books. Some acceptable forms by the IRS are receipts, audited financial statements, bank statements, MileIQ I talked about already, and keep those for at least 5 years. All right. Remember, your deadlines are April 15th, June 15th, September 15th, and January 15th for your estimated taxes if you owe at least $1,000 or more in taxes. Okay, so if you owe at least that much, then you need to make sure that you are actually sending in those estimated quarterly tax deadlines. And here are the other return deadlines as well. If you are an S Corp, you have to send in your return, your 1120S, by March 15th. Individual and C Corp returns by April 15th. S Corp and extension deadlines, they're all here. You can always look it up and Google that. But make sure you get it in on time, because if you don't, you may receive a letter from the IRS stating that you owe thousands of dollars. And like, hey, who wants to pay that extra money in penalties and interest when you could have sent it in on time? And this literally happens to me all the time. So make sure that you get your tax returns in on time. So last slide. Can you file your own taxes? Yes. Should you file your own taxes? Don't know. But there's my QR code. Right. There's my QR code if you want to scan it, and you can go there, book a consultation. It's the end of the year. If you want to book an end of the year tax strategy consultation with me, you can go online and book it there. You can also book a discovery meeting just to talk more about our accounting services at Life Tax. We are a team of CPAs, enrolled agents, and tax professionals ready to serve you. So thank you for your time. go to our website, go to the QR code, and look us up and schedule your time.
Good stuff, bro. Here, guys, for everybody watching, here's my answer to everything that Alfred just said. Hire him, right? If it's not him, if you already know another amazing CPA, like, do not let this stuff get behind you. I'm learning the hard way with some of this stuff, and it's not fun. It takes all the fun out of your business.
Yes, it will.
When you let this get behind you.
Yeah.
And so, dude, thank you for trying to keep us all out in front of all this stuff. And man, it's not always the funnest thing to talk about, but it's the most important thing any of us need to make decisions on for our business.
Right. Because who wants to go through all the stuff that you go through to keep your business afloat and make this money, and then you get hit with a letter saying you owe $50,000, and you're like, what the hell? Like, who wants that? So you have to stay in front of it and be proactive, so you're not getting these nasty letters, and then they're trying to shut your business down and put liens on your account and all that stuff, or you're trying to buy a house. Oh, it can be a nightmare. So let somebody take care of it for you, and it's important. And I'll be back on at the end.
Yes, sir.
Talk about it.
Appreciate you, bro.
Yes, sir.
All right, guys, moving on. We're going to shift gears a little bit. We're going to move from taxes and we're going to move into the power of social media, more specifically, the power of video. And so I'm going to keep this real short and sweet for you guys, but I want to just talk about the power of video. And if you want any of the slides that I'm going to show, feel free to reach out to me. I'll put, you can find me at Coach Kyle Draper all over social media. You can email me at kyle@kyledraper.com. However I can help you. But guys, I want to just pay attention to 2 data points real quick. 1, video is expected by the end of this year to take over 80% of search results. What does that mean? That means when someone goes online looking for you, looking for your industry, looking for the services or products you provide, whoever is doing video content is going to show up first. Google, the largest search engine in the world, is also the owner of YouTube, the second largest search engine in the world. And so when I'm working with people, my question to them is, do you really want to be fighting for scraps in the bottom 20% of the internet? Or do you want to show up in the top? And then do you want to be doing video because you're able to showcase your personality? You're able to let people see you, hear you, experience you as if you're across the table from each other, even though you're not. And so this is important, guys. And then think about this. I remember when Instagram started, and I was pumped because I'd always been told that a picture is worth 1,000 words. And now we're estimating that 1 minute of video, 1 minute of someone talking into the camera like we're doing right now in this event is worth 1.8 million words. It's worth 1.8 million words. And so this is absolutely changing the game for people that are small business owners, guys, because we don't all have a ton of money. We're small business owners, right? We are pinching pennies trying to make this work. And so this is an absolutely free way for you to market your business, for you to be in front of people, for you to have influence. And you got to take advantage of it. And then if you're not yet sold, right this second, over 500 million people are watching videos on Facebook every single day. Over 500 million people. And then 95% is the amount of information we can recall when we watch something versus roughly 10% of what we read. And so for some of you, your biggest takeaway from my part of this event might be go look at your website. And anywhere on your website where you just have a gaudy amount of words, what if instead you went and recorded a video and put that in its place? You're far more likely to get people to push play on that video than to read 10 minutes worth of your typing. And so this is the world that we've got to choose to live in. And so to do this, we've got to break down some barriers because, guys, I get the privilege of traveling the country working with a lot of realtors and lenders is my ideal audience. And everybody is struggling with one, if not all, of these 8 things. We can get caught up in feeling like, well, everybody's already doing it. The coffee shop down the street does it better than me. The company that my friend has does it better than me. Like, I should have started when they started. Guys, we are scratching the surface of technology right now. We're scratching the surface. The way video is going to be leveraged moving forward is still, in my opinion, in its infancy. Right? We've got platforms like YouTube that, even though they're 15 years old, we're still seeing new YouTube users get to 100,000 subscribers quickly, because this is how powerful it is. Some of you may say, like, you don't have the right equipment. If you have this, you have the right equipment. Guys, most new phones shoot in 4K. It is the highest quality of watchable TV, of watchable movies, of watchable video. And so you don't need a fancy camera, fancy lighting, a fancy studio. You just need to show up. You got to show up. Some of you might think, I just don't think it works. Guys, I have built my entire business on showing up on camera for people. That's the reason I speak all over the country. That's the reason I have the businesses that I have, is because I show up on a regular basis. And so what took my parents years and years and years to grow doing one-on-ones with people, I get to accomplish that in a fraction of the time, because while I show up on camera, you get to sit in the comfort of your own home, your office, your car, the pool, wherever, and consume my content. It's unbelievably powerful. For others, I don't know what to say. I don't know what to say. Guys, in just a minute, I'm going to break this down for you, and I'm going to change the game for you. Some of you might think that people just don't care. Spoiler alert, they do. They're called your people. Maybe you don't have the time, and I can't jump into this right now, but we make the time for what we value. So if you don't have time, you don't value this the way that you should. You're afraid to mess up. You're the perfectionist. Perfect isn't relatable. You want to grow a great business, you better relate to people. And you don't relate to people by always trying to be perfect every time you show up on camera. And then maybe for a couple of you just feel too old for this. You're not. You are not. And here's how we're going to fix it. All right, the way we fix this is thinking about the last time we had coffee with somebody. When we had coffee, we weren't consumed with the way we looked. We weren't consumed with the way we sounded. And then we weren't consumed with, like, what do I say? What do I do? How do I do this? What if we don't know what to talk about? Guys, when we go to coffee with people, we go to coffee with them. You talk about whatever you talk about. You talk about life. You talk about what happened yesterday. You talk about Christmas coming up. You talk about your business. You talk about everything. But then we think, well, when it comes to promoting ourselves online, we have to throw all that out the window, and we have to come up with this perfectly articulated thing. And guys, that's not real life. People want to relate to you as the human before they want to know you as the business owner. And so what we've got to figure out is how to get over this. Right? All of a sudden, we can show up to coffee, but we want to put a mask on when we're on camera because all of a sudden we're afraid of what we look like. Or we want to borrow Kanye's auto tuner so we can sound cool. Right? And that's not real life. Guys, this is not how we execute video for the growth of our business. And the last thing is this. You need to talk about the same things that you and I would talk about if we were sharing coffee at a Starbucks. This is how we stop overthinking what video can do for our business. And so, guys, if I can give you one tip, my tip would be this: be relatable and valuable. How do we be relatable? By talking about things that some might deem as unprofessional. I have a term in my business that I call raw professional, is being raw, yet being professional. And here's what this can look like. I will do a video when I'm out for a walk. And so I'm sweating. My hair isn't done. I probably have a hat on, but it's when I'm walking that I get the greatest like moments of clarity in my life. And so I'll jump on camera and do a video. I'll do a video on my back porch where I know that my dog might come out and bark. I know one of my kids is probably going to come out there and want to, you know, stick his tongue out to the camera, because I want you to remember that though I'm a business owner, I'm also a dad. This is how we bridge the gap between always feeling like we've got to be professional and also bringing in a little bit of the raw element. And so the way to accomplish video in your business is to work it in to where you're already going to be every day. Where is that? For me, it's in the carpool line. For me, it's sitting in gridlock traffic. If you can figure out how to do this in those environments, no longer will you have to go, well, I just don't have time. I don't have time. Guys, you don't need time. You need to work it in to what you're already doing. And when you start doing video, you will instantly notice a game-changing opportunity in your business. Because what video is, and then I'm done. What video is your own personal army of foot soldiers that work for you, whether you're working or not. So that while I'm doing the virtual summit right now, there's people watching my videos. There's people watching me on YouTube, on Facebook, on Instagram, on TikTok, on LinkedIn. And so those things are benefiting me while I'm giving my time to you. This is the power of video. And so if I can help you guys with it, please reach out to me. It would be an honor to help you in any capacity. And we're gonna tie a pretty bow on this, because video is just one aspect of this. Because another aspect of what we're trying to do, what's up, Will?
What's up, man? What's going on, Kyle?
Is branding, right? Branding
Yes,
is so valuable to what we're trying to accomplish as business owners. And so, Will, I'm going to get out of the way, and I'm going to just let you give us some goods on all things branding.
Thank you so much, Kyle. I appreciate it, man. I think that, you talking about video is, exactly what the doctor ordered. And I'm excited to talk a little bit about that. In the same vein, some of the things that are so important when it comes to structuring your business. So I'm going to be talking a little bit about money, and I'm also going to be talking about marketing. Okay, so a little bit about me. William White. I am the owner and chief financial advisor at Forge and Link Financial. Started this back in 2014. We work with professionals, business owners, truck drivers, and their families. And our key thing is to refine your mind and connect to success. So one of the things that I want to talk about is the W to the fourth power when it comes to branding. Okay, so here's what I want to talk about. Who? One of the biggest things that you can do in the marketplace is to establish who you are as a business. It seems simple enough, but a lot of times what happens is there's things that are colluded as to who you are, so people can be able to identify you, what it is that you do specifically. When did you start? That's a beautiful thing. Infancy shouldn't be shied away from. I think it's an honest thing to say whenever it is that you started doing what it is that you do and what your passion is. And then what's your why? This is what keeps you in the business. This is what keeps you going, keeps you driven. So it's so important that you answer these four things when it comes to branding, because then whenever times come to where you're dragged in multiple different places and multiple different directions that you could go, you can come back to what got you to the place that you're at. That's why branding is important. It's not just proactive. It's also reactive to what it is that you will be in the marketplace. All right. Next thing is, and I can't say and stress this enough, be who you are, and don't be, and that's terrible grammar, but I'm gonna say it just like that. Don't be who you are not. Here's why. Have you ever run into the person who said, well, I'm a plumber, but I'm also I can also do your taxes. Or I can, I also, do painting. I do this and that. The issue with that is the fact that people can't really understand and identify whenever there is a problem. Whenever there's a problem that arises and comes up, they don't necessarily know to think of you in that vein. They don't think to know that if you're a painter, right, and you're starting a painting business, you can't say, but I also do insurance on the side. They don't know who to trust and how to trust. They don't know that you're going to be brilliant within your own space. That's why it's so important that you be who you are and be proud of it. If you're a painter, be a painter and be the best painter, because like me, I'm moving into a house. I need a painter, but I don't want a person that I know everything for. Okay. Be who you are within your business. Okay. That's one of the biggest things that you can take away as far as branding. Next thing, you sold your first, you made your first sale. It is a happy time whenever, everything that you've been, putting yourself, on the line and all that anxiety, and that first person believes in you. That's huge. That's huge. So here's how you deal with it. Okay. The first thing is pump your brakes, reinvest into your business. That's the only thing that you need to do. Okay. And you see that there's several other bullet points on here, but it is the bullet point to reinvest. Okay. Buy more product, get your inventory back up. Okay. Invest into systems. I can't tell you enough how important it is. And I can't wait for our next presenter that you have systems in place as to how you work in two ways: with your clients or customers and your business. Okay. Investing into that from a monetary standpoint, whatever systems you need to buy, very important. Don't go on vacation. You don't have profit yet. Okay. Here's a good rule of thumb. Once you get to a point where you're at 125% of your take home. So if you need $5,000 in order to live, 5,025, so $6,000, yeah, and you're bringing in $6,000 consistently, take you home $1,000. That's a good rule of thumb to kind of start everything. Okay, so here we go. Here's the next thing. Here's an example of how you should do things in what order. Okay, number one is inventory. Okay, so if you're a painter, you need to buy more paint. Okay, once that person comes, you need to replenish what it is that your coffers let go. Okay, next thing, we just talked about this with Kyle. Okay, social media events, doing video with Kyle. Okay, it is super important that you are into the marketplace. The number one rule of marketing, and it's so funny that Alfred has the same degree as me and how we started, but we're both in financial services. But I have a marketing degree as well. That was my undergrad, marketing management. And so one of the first rule of marketing is be where the people are. What are the people? They're on their phones, just like what Kyle talked about. 80% of people are watching video. That's huge. 1.8 million words in a 1-minute video. That's huge. You have to be where those people are. Okay. So the next thing is employee and overhead. I can't stress enough how important it is whenever you're owning a business to be able to get other people to adopt your methodologies as well and believe into your dreams and the things that you structured. And so paying for that duplication, which is your employees or any overhead, phenomenal. Your salary, and also then your salary comes after, and then retirement savings. Okay, so that's pretty much all I have. If you have any questions in regards to more, because there's so much more that I can share, even more on the money side and how you structure your money and how you build your business flows. There's so much more that I can talk about, but the biggest thing is to be on time in this time, because we have so much good stuff that's going to be coming to you. So I wanted to be brief, but I wanted you to take some nuggets home immediately that you can implement into your thought and in your systems, so we can go move forward. So I'm going to turn it back over to Kyle. Kyle, you there, man?
I love it, bro. Yes, sir. Man, look at us. You and me, we went really quick, because we knew that Alfred was going to take an hour, and then we wanted to give time for Sheena because she's the one that we're all here for anyway. And so great nuggets, bro. We'll dig a little bit deeper into some of that stuff for Q&A.
I love it. Can't wait, man.
We'll see you back here in a few.
Sounds good.
All right, guys, I'm going to bring up she may be presenting last today, but she is not the least of this group, because Sheena, you hold, in my opinion, like you hold the golden goose to everybody's business, because what I watch happen in my own business and a lot of other people's business is everything runs through them. Everything bottlenecks at them. They are a dam, not a reservoir. And so everybody gets their business to that natural place based on who they are. And then they want to pull all their hair out because they have no idea how to get beyond that. And then they don't know how to take a vacation. They don't even know how to take 4 hours off. And so you specialize in systems and processes and strategy, all the things that we need to get our business from where it is to where we want it to be. And so I'm going to just get out of the way and let you take us to school.
Thank you, Kyle. That's why I didn't even have an intro slide up here, because I knew that you were going to bring me in just right. Hey, everybody. So what I want to do is start off with some stats that say, I love statistics, and these 3 statistics can actually really save you if you are starting off in business, or if you're currently in the weeds and you're suffering from some issues, related to your client experience as well as your organizational performance. 1 in 26 customers complain, the rest say nothing. This is a huge statistic because for most business owners, you don't want to hear that one person that's complaining. You think that any type of criticism is a negative slight on your business. Well, actually, you're missing an opportunity to grow and to continue to build a better business. Those other 25 that walk away and don't say anything are either never going to come back and buy your service or product again, and or they're going to tell people within their circles not to utilize you. So you really want to make sure that you change this stat around to 26 and 26 people saying something to you, period. The next one I want you to look at is this 86% of buyers are willing to pay more for a great customer experience. No longer are buyers looking at the bottom line price. They really want to develop a relationship with your business, with your brand. And so they're willing to pay a little bit more for a great experience with you. The key is you have to be willing to curate that experience. And I really love Salesforce stats down here at the bottom, the marketer's top challenges. I love when my clients tell me exactly where their pain points are, because that's where I can go in and help. And if you look here, I want you to look very closely at number 3 and number 5. Creating a cohesive customer journey across channels and devices and insufficient organizational structures and processes were some of marketers' top challenges. You guys, this is key, because most of you are probably falling somewhere within these 5 points. Either you've started your business out and you don't have any processes in place, so you don't know how to service your clients, your customers, and your staff. If you happen to have employees, they don't know how to support your clients or your customers. You may not be at a point to where you're innovating on anything, but if you're doing things manually, I can guarantee you that there are some automations out there that you can have in place so that you can spend less time working in your business and spend time working on your business. Spend time developing your business and your relationships. Collaboration is also key, but again, cohesive customer journey, that's what I'm going to focus on today. And so we're going to talk a little bit about really developing your voice of the client. The voice of the client is going to tell you exactly what they need. I always say the market tells you what they want. The client tells you what they need. And so you need to be willing to listen to what the voice of your client is saying. So you need to ask yourself, what does your client say about your brand? Now, if you're not eliciting any type of feedback at any point during your process with your clients or customers, you are missing the mark. I mean, seriously missing the mark. And you're going to end up in that first statistic with the majority of your customers walking away not saying anything at all. So the feedback that you get back from your clients is what's going to help you kind of tweak your processes, tweak your offerings so that you can meet their needs and so that you can help develop and grow your business down the line. Does your process add value to the customer experience? Added value is so important. When you started your business, one of the things that you were told to do in your business plan was identify your value add, your value proposition. What value do you bring to your customer? It's the same thing when you're mapping out your processes. What type of value does your process bring to that client experience? Meaning, are you over communicating? Are you under communicating? Are your processes too long? Is it taking you too long to get from the prospect to that client conversion goal? What does that process say and how does it really impact that experience? And then finally, who is interacting with your clients? This is often a missed mark in businesses because you may be outsourcing some areas of your business. You may have subconsultants, agents, advisors, subcontractors, and then even your employees. If you don't know who's touching your clients, then you don't know what's being said about your brand, about the process, or anything for that matter. So it's very important that you spend time determining who is going to be involved in that process with your clients outside of yourself. So here are 4 questions I want you to ask yourself. Write down, or 4 steps, write down your entire client journey from prospect to client conversion. This first step is important. You don't need any software. You don't need a platform. You need a piece of paper and a pen, or you can open up a Word document on your computer. That's it. You're going to write down all these steps in bullet form. And basically, it's from the very point, that initial point that they contact you, if that's via Instagram, Facebook, your website, if they're shooting you a text, how are they making that initial connection with you? And then what's the next step? And as you write these steps out, I also want you to think about what you're doing on your side. So once they submit their scheduler to book your calendar, what are you doing? Are they sending you a lead generation form? And if they are you reviewing that form? How soon before that meeting are you reviewing the form? Is there additional information that you need to ask them for? Do you need to send them a follow-up fact finder? What are those steps? All of the steps between the time that they initially contact you and you convert them to a client. If you start with that piece of your process, it's going to make flowing into your actual deliverables. So where you are working with your clients, you're selling those products, it'll help you develop that aspect of your process a lot easier. Step 2, identify how many times and when you ask for feedback. Y'all, I can't tell you again how important feedback is. Once you go through step 1, if you notice that at no point have you sent them a survey, have you asked them for a video testimonial, have they submitted anything to you, maybe via email or text to tell you how the experience was for them? If there is at no point in your process where you're asking them for feedback, it's time for you to develop those actionable steps within your process. The next step, determine how many days, weeks, or even hours each step requires before completion. This is key. And a lot of people that I talk to end up frustrating more aspects of their business. And by more aspects, I mean the financial aspects of their business, because they don't know how long their process takes. So you're underbidding. You're sending out a proposal and you're telling this prospective client that you can do this work in 3 weeks and it's only going to take you, 48 hours to get all the major portions done. When in actuality, it's going to take you 6 months and you're probably going to end up losing thousands of dollars because you underbidded yourself, because you weren't clear on how long your actual client process takes. So it's very important that you sit down and you really identify how long, how many hours between each step of your process, How many days between each step of your process before you move on to that next actionable phase? And then step 4, review how many times the following actions occur. Emails to clients. It is a pet peeve of mine when I am working with another consultant at a business and I get 4 or 5 emails within 2 days and they say absolutely nothing. Be very cognizant about how much you are communicating with your clients and at what intervals. I mean, if your emails don't contain the 4 C's, content, meaning what is it? Cadence, how often you're communicating. The correct contact, make sure you're sending it to the right person. And then a call to action, be it you providing them with a deliverable, you asking them to submit information to you asking them to review information. There needs to be something actionable that your client or your customer is receiving in these emails. SMS notifications to clients. Some of you may already have technology in place and you have that fancy option to send out text messages when you're needing additional information, you're trying to update them. How often are you sending those out and what are those messages saying? Meetings and chats. Meetings are great. Quick chats are really great for project updates, but how many of those are you having? And then finally, as I say, your call to action to your clients. What are those and are they important? So this is a really great way for you to, one, start to develop the voice of the client within your business, but also start to map out your full client journey. The next thing we're going to talk about is avoiding platform pressure. Now, normally when I go through a discovery call with a client and I ask them what type of systems they have in place, many of them already have systems that they're working with. Some of those systems they're not currently in on a daily basis because they really don't know how to get in and configure them to master the tasks that they need to get through for each of their processes. Others, they don't have any processes or any systems in place right now. Software platforms and apps can become expensive investments, especially if you're starting out and for emerging businesses. Oftentimes, a simple free version will do exactly what you need it to do. So you don't need to go out and necessarily buy the biggest platform out there. Salesforce is very common to a lot of businesses, and there are many others out there. Zoho, I mean, I could go on and on and on. But if you don't necessarily need such a robust system to begin with, don't invest that money. And here are some things I want you to consider. Constraints, limited budget. You heard Alfred talk about taxes earlier. Everything is going to impact your bottom line. You need to make sure you have enough money to even afford a system. And if you do have money allocated towards systems and software, how much and what can you get for that? Learning curve. If you're not technology savvy, then you need to consider hiring someone else that can come in and do what you need to be done. You need to hire somebody to come in and maybe augment that system for you. Or you need to allocate time to learn that system so that you can do some of those things for yourself up front. And then developer support. That's another constraint that you need to consider because some systems will require that developers go in and they customize the system for you, meaning you don't even have access to get in and make any changes to that system. Return on investment is another thing to consider. System payoff time frame. How long is it going to take you to pay off that particular piece of technology that you just purchased? And this goes back to you really understanding the full breadth of what your business does. If you have a system that's in place, I always say my clients who have a seat in that system are paying for some portion of that system because it's in my margins. If you don't understand again how much time it's going to take you and what goes into you actually providing that service or that product, then 9 times out of 10, you're going to purchase something that you'll never be able to pay for. One of the things I wish that I had known when I initially started out in 2016 was that I didn't need a system that I purchased. It was pretty large for my business. It took me almost 2 years to pay it off, and I had to pay it off with my own money because I didn't have the clients at the time that I could afford to pay it off. So you have to be very careful about biting off more than you can chew when you are in those first stages of business. And then the value to the client experience. Again, I keep going back to that because if you have a system and it's not really doing anything that is supporting your overall project or you providing that service or that product, what type of value does that really bring to your client experience? A lot of people love these systems now where you can provide kind of that client portal and they can go in and they can do certain things. They can upload documents, they can monitor the status of their project, but if it goes beyond that, what type of value is that to your client? Is it necessary, or is it just another step that your client has to take in order to receive information that perhaps you could maybe send to them in an email or via a text message? So think about those things as you're looking at your particular technology. And then finally, growth and expansion. It is my hope that everyone that is listening, that's watching this, you are going to be growing and expanding within the next years. So as you think about the future growth of your business and bringing in certain platforms, consider the future enhancements that you'll need. And does that platform allow for those types of enhancements? Or will you have to go out and procure a different type of system in order to integrate so that you can have that robustness that you need for either reporting or just to handle the amount of clients that you have? Customizations. These can be very expensive. If you are providing a service that's very specialized and there's nothing that's kind of off the shelf that you can currently buy, you need to consider how much it's going to cost you to design and then have a system customized for yourself, okay, for your business. And you also have to consider all of the maintenance that will come post the launch of that system. So off the shelf options may be a very good way for you to go. And you guys, there are so many out there that you can get for very reasonable prices. And again, back to my point earlier, a lot of them have free modules, so you don't have to purchase, kind of that business product up front. But consider the off-the-shelf options. Consider those, vet them very closely. If you need some assistance and you want to just reach out to me and say, hey, Sheena, I'm looking at these types of systems for my CRM. What do you suggest? I would be happy to kind of go through some of the things that, would benefit your business where you are. When I'm working with my clients, I'm always looking at phasing the growth of their business and phasing the growth of their systems. So I'm never going to tell you, you need to buy the enterprise product. I'm never going to tell you that, because when you're starting out, depending on where your business is, the growth and the size of your business, that's not going to necessarily be what you need right then and there. So think about your platforms as you would the growth of your business. As your business grows, your platforms are going to increase as well. So finally, this is my last little slide. I wanted to make this really quick for you guys. Intentional processes drive expected outcomes. Spend the time curating the type of process that you want your clients to have, the type of experience that you want them to have with your brand. If you don't do that, then whatever that feedback is that they get, and if that feedback is they're walking away from your brand and they're finding a competitor, that's you that's left that opportunity open. So Kyle, that's all I've got. I'm going to throw it back over to you.
Sheena, that was so good. Like that, there is no doubt that we chose the right person to back clean up for the virtual summit. And so I know we've got questions. We've also got some questions that we get frequently that we're going to talk through as well. So guys, you're watching. If you've got questions for any of the four of us, please put them in the comments and we would love to talk through them. As we're waiting for some live questions to come in, we've got some questions that we get asked a lot that we didn't have time to discuss in our presentations, but it's a great time to discuss now. And so let's just, Sheena, you've already been crushing it so hard. So let's just keep it with you. One of the questions that you see frequently is, I had to pivot during COVID, and I'm serving new customers with new services. How do I keep my prior clients satisfied when it's only me?
Yeah, no, this is a good one. I think we all have had to pivot and do something different with COVID. So I feel like pivot and COVID are now going to be added to the dictionary if they have not. I know pivot's in there already, but COVID will definitely be in there. So yeah, it's become kind of a business norm of having to service new clients, find different ways to keep that revenue coming in. And so if this is something that you're facing, I would definitely tell you the first thing is develop two customer pathways. So you have to
Okay.
understand that you can't leave your old customers behind because you now have this new base that you're serving. So map out two customer pathways, all those processes, all those various steps, and then think about points in that process where you may have some type of overlap. It's just you. So you really need to figure out how you can tie in connecting those two customer bases together so that you're not spinning your wheels at both ends, trying to answer
Yeah.
emails here, emails there, and all that good stuff. And then develop your communication pathways. You are not going to talk to your previous clients the same way that you're talking to your new ones. So develop customer communication pathways with information that meets those 4 C's that I mentioned earlier and speaks to what each of those client bases need.
I love it. So good. So good. And guys, please, when we say reach out to us, right? We mean this. We aren't just saying this because that's what you're supposed to say. This is a non-profit. If we can't reiterate this enough, we are not paid to be here. And if we're being totally honest, we pay dues to keep this organization moving forward, right? So we pay to be a part of this because we believe in entrepreneurship and growing up local communities. And so please, please, please take advantage of the experts that are part of this. And Alfred, I want to come to you because we've got a question. I don't even know if this question is I feel like this is like partially joking, but partially like, no, seriously, like if I hire my kids, like what does that mean for taxes? So man, break this down for the person asking, can I hire my kids?
Yeah, so it's actually a pretty huge tax hack, as they call it. Can you hire your kids? It sounds funny, but it actually is serious because you actually can hire your kids if they are old enough to perform some type of business services or to add to your business or have some kind of duty. Okay. So it's a really cool thing. I'm going to break it down for you in like 60 seconds. Basically, you need to hire your kids at the right age. Check with your state to make sure that there aren't any kind of child labor law issues going on there.
What is it for us in Texas?
Huh?
What's the age? What's the minimum age for us?
So the minimum age in Texas technically is 12 years old, but that's if you're like hiring them as an employee for labor. But you can hire your child as an actual contractor to just do like sweeping up in the office. Have you ever been to those barbershops? I know back in the day when I used to get my haircut, they used to have those young guys in there sweeping up, and they used to pay them, the barbers used to pay them cash. Same principle here. Okay. You go in, they sweep up, they take out the trash, they put files away, they dust, whatever the case may be, keeping them active. And guess what? You can pay them up to the standard deduction per year, and they don't have to file any taxes on it. Well, what's the standard deduction for a child? $12,500. So you can basically pay them $1,000 a month, right? And that is a deduction for your company. Now, we're not taking these deductions just to make losses and just to spiral into losses all day. But no, if you have a taxable liability of $20,000, hey, I need to cut that in half. I need to, take $12,000 off of that. Well, go pay your child. Pay your child that's able to work. They can walk and move things around and live, and pay them $1,000 a month or $12,000 for the year. That's a deduction for the company. And then when they get paid by that check from the company, well, what are they going to do with the money? You're going to, as a parent, let them spend $12,000? No, you're going to give it to your financial advisor like William and figure out what can I set up for their future for this money that I've just paid them. That's your tax hack.
Man, brilliant. Here, I thought that question was a joke. It's actually not a joke. This is why I don't do taxes, and I just focus on social media. Man, that's awesome. So, Will, we've also got a question. And this is a question that I have. I didn't submit this question, but I have this question. Like, what do I invest in, and when should I invest? Man, we've got there. I mean, this is just this question 10 years ago was so simple, but now we've got long-term, short-term. We've got NFTs. We've got crypto. We've got man, like give us some insight into this question.
Yeah. First of all, I want to make sure that everybody understands the concept of investing. Everybody understands relatively that whenever you have a seed, you don't eat the seed. Everybody understand that, right? So whenever you invest, you are giving up something to get something in return. Now, there's a thing on the marketplace to where people are hoping that things happen. History has shown us through so many different things that we should expect growth. Should we expect hard times? Absolutely. We should expect that. But the concept of investing is literally taking something and expecting something to be greater. Okay. So to answer the question, what should you invest in? The answer is you need to get with your financial professional, because there are several things that you are going to need to do before you start investing. Number one, you need to get your risk tolerance examined, meaning that you need to figure out what is important, or what can you stand to lose. Okay. And then also risk capacity. This is something that a fiduciary is going to take upon itself to say, hey, based on the metrics and everything that you have, even though your tolerance might be aggressive, you don't have enough time to be aggressive. So we really need to be somewhere between moderate to mildly aggressive. So that's the answer that I normally give people whenever they say, what do I invest in? It can't be that simple if me just saying one fund family, and saying that should be what it is. But when is pretty much, when the time is right. So I literally told you nothing, but I did tell you where to start. So I'll put it.
Well, because I'm emceeing this thing and I'm in control, and so I can ask you guys whatever I want. And so while I've got the financial experts on the virtual summit, like what are y'all's personal thoughts on crypto, this whole NFT world? Like, because I just look at it as a consumer and I'm like, oh my gosh, like what am I? So what are y'all's thoughts on it?
Al, you go first, bro.
Okay, I'll speak on that first. It's no problem. So yeah, crypto's out there. NFTs is a new thing. So here's what I say: no matter what comes out, education is always key. Education is paramount. You have got to educate yourself first on these things, and don't just go out there fishing and just hoping you're going to get a bite and hoping you're going to get this, return on your investment of 100%, 1,000%, whatever the case may be. I see this stuff all day long. And at the end of the day, you have to educate yourself first to make sure, is this the right time? Is this the right fit? Is this the right strategy for what I'm trying to do? Focus on what you need to focus on first with your business. Make sure your business is in order. Make sure your affairs are in order. And then, okay, let's look at crypto a little bit here. Let me educate myself on NFTs and see, hey, I like this. This is the right fit. There's enough people talking about this. It's been tested. It's been tried before. Because I'm by nature not a gambler, and and my risk tolerance is really low. So before I'm going to put my money on anything, I need to know. I need to make sure that John down the street didn't get burned on the same type of investment. And then here I go, So that's my take on it. And
I am the opposite.
I do think it's the future, though, and I do think you need to educate yourself about it because it is definitely coming up.
So where is what's a good free resource from an educational perspective that you guys tap into to just read up on different things?
Go ahead, Al.
Well, for me, my first go-to is IRS because I'm the tax guy. I'm looking at their publications.
Good answer.
Things going. So I'm always looking to see from a tax standpoint what it's going to be. But Will, do you have any that you just it's kind of that's a little bit less technical, maybe that are easier reads?
Yeah, I mean, so to go back to the previous question, Kyle, to answer that, up until up until maybe probably 2017, NFTs and cryptos were, kind of speculation. They were in the private, deep in the private sector. Now it's one of the hottest things that's talked about.
Yeah.
We're seeing millionaires overnight created. So, as a fiduciary financial advisor, it's not publicly traded. So it's not something that we technically can directly speak on and talk with our clients. However, we cannot shy away from it now being the number one alternative investment, those currencies, because they're talked about on the marketplace so much. So
Sure.
it's something that, definitely we have to be abreast with, and we have to do our research with different sites and things of that nature. So I can say that.
So what I heard y'all say is go all in on crypto and NFTs. That's what I heard is take it all, cash out everything, and just go hard at NFTs and crypto. That's what I heard. I don't know, Sheena, what you heard, but that's what I heard.
I didn't hear that, but you've got me.
You're the one with the headphones on.
Guys,
there you go.
for those of you watching this, take very little seriously that comes out of my mouth. Just know that. So, guys, this has been an unbelievable summit. So much knowledge and wisdom dropped in such a short amount of time. And Alfred, I think we would be doing people a disservice if we didn't end this with telling them, one, how they can be involved, right? We want this to grow. We want more men and women to be a part of it. So I'd love for you to speak to that. And then two, we also want to promote what's coming next. And so give the people what they want.
So yes, we are glad that you have joined in with us today, or whenever you're watching this, even if it's on the rebroadcast. We need you. Okay. We can't do everything just the four of us. We're the board, but we actually have active committees that we need help with. So if you would like to get involved in helping to further the vision of this organization, which is basically helping entrepreneurs to take their businesses to the next level, whether it's going from a side hustle to a full-time entrepreneurship level, or just scaling your business and putting processes in place. We're here to help make and nurture and coach new business owners. So if that resonates with you then join us. We have lots of committees. You don't necessarily have to be on the board. You can just show up to our events, or you can tell a friend. Go to our website and give a donation. Hey, we need money. Like Kyle said earlier, like he said, we have to pay into this just for this to continue to go. So we need your donations. It's not Giving Tuesday, but it's Giving Wednesday. I just called it. So go and give to our organization, EmPower, DFW.org. I don't know if you want to flash that, Kyle, but it's EmPower, EmPower.org, and you can go right there to our website, and there's a button to give, and you can give to any amount. We'll take it, and we will definitely appreciate it. And we are a 501c3, so it can be considered tax deductible. But again, you want to get involved, put a note on this live chat right now. We'll respond to you later. You can also send me a message, an email, alfred@lifetaxfinancial.com. I don't have the EmPower domain set yet for the email, but email me at alfred@lifetaxfinancial.com directly, and we can get you plugged in and get on board. And what's coming up next? We're going to be planning a power hour, as I like to call it, in February. Okay. We're going to do a happy hour and take it to the next level. And we're not just going to be, going into a room and just being stuffy and sitting around drinking. We're going to actually have you learn something. We're going to actually have you be engaged and help to promote your business. So that's what we're going to be doing in late February. So stay tuned to our page, like and subscribe our page, and we'll be putting more information out on that happy hour or that power hour coming up in late February of 2022.
Yes. And so, guys, with that being said, we did it. We did our second annual virtual summit. Guys, thank you so much for being a part of this. Thank you for giving us your lunch break to hopefully have learned something. And so here's my ask to you guys. Learning is great, but implementation is where we make the money.
Yep.
And so go look over your notes, go look at something that was said, and go implement it. Put it into your business, even if it's painful, and watch that seed grow, that as Will mentioned earlier. So guys, thanks for tuning in, and we look forward to seeing you guys hopefully in February at our Power Hour. We'll see y'all soon.
See ya. Take care.